All right, everyone, how are we doing? Welcome to the Aedge Trading YouTube. I am Cobra. Today we are going to be doing our first Bitcoin analysis on this channel. So I know that I've been getting a lot of DMs from people that follow me, people that follow the Aedge group, wondering, hey, when are you guys going to start doing videos again? Here I am, we're back. We just relaunched the website. Today is actually Monday the 20th. And we just relaunched the website last week. We finalized our partnership that we had going on for a while, and we've been extremely busy. So a couple of the things that we have upcoming is going to be revamping our entire educational course. We're extremely excited because I'm working directly with a level 3 CFA candidate to curate all of that material for our members and everything. It's looking absolutely fantastic, and we've got a lot of stuff planned with that. We actually just launched a public section of our Discord as well. Links to all that is going to be in the description down below. Feel free, check us out. We've got a whole free public section now, lots of discussion, charts, the whole 9 yards. And we're also in the process of continuing to work with the developers of VENBOT to integrate our new partner exchange, which is DueDEX. So with that, let's go ahead and get into the charts right after a word from our sponsor. DueDEX is a derivatives exchange that's fair. This means no internal trading desk, no exchange token, and no hot wallets. They offer 24/7 customer support, sign-up bonuses, and even a simple, easy-to-use interface so traders of all levels of experience can get started fast. The best part is they're constantly working to improve their exchange, and they actually listen to their users' advice on how to make it better. Check out our link in the description below and get up to a $110 trading bonus with qualifying deposit now. Weekly chart, right? That's where I like to always start. Bare bones chart, looking at the weekly. We have had 2 very, very bullish weeks here, and we're just opening up a new week with not really too much momentum, right? We're just kind of stuck in a range right now. It's very early on into the week, but that's okay. Bam, new year, new you, and we ended up getting a really nice bump up in price. So down here on this bottom, let's take a look at these candles, right? On this bottom, we had spinning top, bearish candle, bullish hammer, kind of a spinning top, doji, and then bam. Once we got that doji and the week closed as a doji, that was it. We started rocketing up, right? So let's turn our volume indicator on. So point of control, right? Point of control is right at this wick here at about $6,400 on the large time frame. So large time frame, the point of control in terms of volume is about $6,400. We're in a really good area of volume here. Luckily, we didn't really get any closes below this because obviously below this point you can really see. I mean, look at the amount of volume that's up in here, and then look at this. This is a major dip in volume here. So if we ended up closing below this, it would have been really bad. We would have seen another one of these, you know, where we come down, and this resistance here in 2000, you know, late 2018, 2019 would have been our support if we would have lost these levels. Luckily, that didn't happen. We have a lot of support down in here, which was the prior support in 2018 before we lost support there. So we came back down, we used that as support again, and now we're starting to push up higher. So I know that the big question is the bottom in? You guys know that I'm really big on Fibonacci retracement. So if we take a look at things and we measure our the 2018 low to the 2019 high so far, basically what ended up happening is we retraced and we did hit the golden pocket. So we used that as support. We actually never broke down and closed below the 65% mark, which is really, really good. In the overall scheme of things, this wasn't really a bull run. This was just kind of a correction from the previous drop in price. So hopefully if we are going to see some momentum change here, and we did build support, and this is going to be our local bottom for now, then yes, we should be continuing to push higher. And I would say that for now, in the midterm, this is our bottom. The bottom is in. I really don't think that we're going to be going back below 6,400. To be honest, I think that even retouching 7,000 at this point would be kind of a stretch. So the weekly chart, we actually never, once we broke down inside of this cloud, it was obviously really bad. We had this huge candle. Once this closed, even though it was a bullish hammer here, and we closed inside this cloud on the weekly, all hell broke loose. So we closed below our Kijun, and we ended up using the 50-week moving average as support. And since then, we came down and we did test the 100, and the 100 was acting as major support along with this golden zone. So all of these things are kind of lining up, right, guys? So now we've actually managed to close above that line and also above the 50% retracement point, and we're using the 50. If you look at today's the start of the week, this is weekly support right now. As of right now, the 50 fib line is acting as strong support, so that's a good sign. Let's take it down a notch and go look at the daily chart. Once we broke above this 200 moving average, use the cloud of support, use the cloud of support, use the cloud of support, use the cloud of support. Now we have just broken back down into the cloud. So I'm going to be watching this daily candle very closely. I think that if this closes on the daily back inside of the cloud, then we're probably going to see a correction of this smaller local move. So this right here is our main move, right? From the 18th to pretty much the 18th, 1 month long exactly. I do have an Elliott wave count for this. I have this whole thing as a 5-wave sequence. Originally, I had this as a 5. That ended up not being true, and I adjusted my count when I saw this little, ascending triangle forming. I was like, okay, if we're going sideways, that's typical movement of a wave 4 in Elliott wave theory, right? So that ended up being in terms of Elliott wave theory, I originally had this, and I believe that this was a 5. I had it up to here like 3, 4, 5 or whatever on the 4-hour chart. Obviously that didn't make sense. The pattern was not complete yet. That's a thing with Elliott wave. This was the end of wave 4 because this was a triangle, and now this is the end of wave 5. So the only way that this count could be invalidated at this point would be that this was some kind of extended correction in here, and this was wave 1, this is 2, this is 3. We're now going to start a lengthy 4 and be moving around here between the 0.5 fib and the top of the cloud for a while, and then come back up for a wave 5, which would bring us close, very close to $10,000. That is possible. That's this is my main bullish count, and then I have that, which I just said, as my alternate bullish count. So the alternate bullish count would be that this whole thing was an extended correction, and then this was a wave 1, 2, 3. We're coming in for a 4, and then we'll hit a 5 up top. So this is also possible. You can count this both ways as of now. Obviously, trading off of Elliott wave is a difficult thing to do. You need to take other factors involved, because Elliott wave theory, you're never going to be able to see a completed wave until the entire wave has completed and you've moved on, right? So it's kind of like a hindsight is 20/20 kind of thing, but it is good to know because it kind of helps you base your trade decision off of multiple factors, right? So it's just another tool for your toolbox. It's a good thing to know. So we have not come down, right, on this daily chart. We have not retested this 200 MA line yet, and that's what I'm thinking is probably going to end up happening, right? So with this move that we've had, let's go ahead and redraw this. Retesting the 200 MA is the 382 retracement. That's my theory for why this could be a 1, 2, 3, and then we could come into a 4. However, that 4 that would violate, that would come into wave 1 territory, And this isn't exactly a diagonal, this is an impulse. So we would end up having, if this is a wave 4, this would be a very shallow wave 4. We wouldn't be able to go past this low that we just had. We would have to stay in this range somewhere, maybe potentially form some kind of sideways action, some kind of pennant or triangle, and then come up for a wave 5. But in general, if this is my first count and this was a completed wave 5, we're looking at flipping over now. If we take a look at some of our indicators, you can see that on our momentum is extremely high right now. We're almost at 80. The MACD has already been forming bearish divergence on the daily chart. So we've been seeing that for quite some time now, an increase in price, a decrease in the momentum oscillator. And then this up here, our RSI, this is the RSI or my SMI? RSI. And up here, we double tapped. This is exaggerated divergence, right? So exaggerated divergence is when you see an indicator going sideways, but the price is either increasing or decreasing, right? So with this indicator going sideways and an increase in price, we've got exaggerated bearish divergence here. So the signs are pointing to me that this would probably be time for this to flip over, and we would be coming down to at least test our 200 MA line. Now, this is a major area of support in here. Let me get rid of all these fib levels and clean this up a little bit. On the 4-hour chart, I did not get in time to catch this. So I waited for the bounce and I shorted up here near this top of this bounce here. I think I'm short from about 8,700 or 8,675 or something. And I plan on leaving that short open. Now, another thing to note here is that on this 4-hour chart, as we're getting into these lower time frames, is if you take a look here, what are we already using on the lower time frame as support? Our 50, right? The purple line is our 50 moving average. So we have actually used this as support and as a guideline since the beginning of this entire run, right? So we had some support here around like 85% or whatever the fib is. And then we came into the cloud. We closed above our Tenkan and Kinjinsen line. We were testing and testing and testing the 200 EMA for about how many days is this? About a whole day. We broke above it, retested as support, the 200, and then that was it. It was off to the races. But once we closed above that 100 and that 50 MA line, we tested the 100 as support. The 50 and the 100 crossed bullish. That was confirmation. If you're a trend, if you're a moving average trader, you like moving averages, that was a telltale sign. We got this doji, another telltale sign. It closed above this red line here is the point of control. It closed above the point of control. We closed above the 200 MA, tested the top of our golden pocket, came back down, tested the 200, came back up. I mean, these are like textbook moves here in terms of like retracement and stuff like that. This is why I like charting on the 4-hour charts, because if you really take a closer look and really work your chart and take a look at what these indicators are telling you, it's pretty cut and dry when you consider price action and you consider the moving averages and you consider you know, like the Ichimoku cloud. And you know, that's pretty much all you need. Even without the Ichimoku cloud, if you just had moving averages, I mean, you know, that's pretty much all you need. I use the 50, the 100, the 200. That's it. You know, that's all I use. I use 3 simple moving averages. Well, not simple. Technically, they're exponential moving averages, but I use 3 moving averages because moving averages are simple. That's the correct way to say it. Let me not confuse you people. So, you know, and fib measurement. We came up, we tested the golden, the 618 retracement, came down, tested the 200 moving average, closed above the 618 retracement, retested it, shot off again. For Ichimoku traders, we tested the top of our Kijin line, came up, found resistance, hovered, came back down. Kijin didn't hold, came back down further. The 50 fib retracement didn't hold. What did we do? We used the 50 EMA as support. And the Kijun line is also down here as well. Use that as support. I mean, you can see it all through here, support, 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 support. We took off all the trend up, support, support. This one ticked it. This wick looks like it hit it to the tick right here. Yeah, within $1. And then, so this one broke down first. It's looking like the point of control up here is probably not going to last for very long. Right now, our point of control on the 4-hour chart is at about 86.50. We lose that. We test the 50 again at 8,600, between 86 and 85.50 or 85.75, a little $25 range here. If that breaks, then we start coming down further. We test our 100, which is also the top of the cloud next, right? So that's about 8,300. If that breaks, we test the 200 down here at about 8,000. So those are the levels that I'm looking for. That's just kind of how I plan out my trades and stuff like that. Obviously combined with indicators, on the 4-hour chart too, I mean, I know that you guys can see this. I mean, it doesn't really get much more obvious that you're approaching a trend change than that, right? I mean, I'm a big trader when it comes to divergences. I love trading divergences. When we get a high and then we start correcting and then we get another high and you get a lower high on the RSI and then you keep moving up and you get another, in general from the whole thing, another lower high in perspective to the first, that there's, when you start seeing divergence like this, I mean, I love trading divergence for this. It it screams at me in the face. Like I love searching for hidden divergence and exaggerated divergence. Normally they're pretty accurate, but you have to take them in strides and really ladder your positions because I like swing trading more than I like scalping, right? And trading off of divergence is a really good tool if you're a swing trader because it takes longer for the divergence to be more apparent. And once it gets so exaggerated and so drawn out, that's when you know that you're getting closer to that flip. So what ended up happening was this was our flip. We ended up, getting a lot higher of a high in price compared to this. This was 8,900. This was almost 92. So about a $300 higher in price. But on the RSI, we hit 80. This was only about 75. So it was a whole 5 points lower. So once that happened, it dropped. There was probably a lot of other traders that noticed this as well. You can see this on the momentum indicator as well. Thank you for Satoshi Heavy I'm going to give a shout out to him. This is his indicator. This is a momentum indicator that he designed himself. And I really like this indicator. It's been extremely helpful. The reason why I like this indicator is because in terms of divergence and stuff, sometimes you'll see divergence on a larger time frame like this. Sometimes you'll see divergence on larger time frames like the daily time frame or something like that, like this exaggerated divergence here, but yet you won't see that on his momentum oscillator. And the reason why is because it's a little more laggy, but two, it stays more true to the things that it's calculated off of. So I really do like that, and that's why it's kind of true to divergence. Like if there is true divergence going on, this is the indicator that I use to ultimately confirm that, and this was my giant confirmation on this indicator. Was we did get a higher high on his moving oscillator that confirmed my divergence on this RSI indicator, telling me that, hey, the momentum eventually it's going to end up flipping over, right? Almost maxed out at 80 on this oscillator, and there's divergence going on up here on the RSI. For me, the use of this indicator helped confirm the RSI divergence in relation to price action. And that's why, even though I missed this original move, that's why I'm short here. So I definitely think that we have another leg down on the lower time frames here. Let me just go ahead real quickly and just kind of go over what I'm seeing here on the lower time frames. Anyway, so 1 hour chart, right? We were super overbought. Well, not super overbought, but we were overbought, right? Overvalued here, and we had markdown. That's basically what this is, in combination with a lot of long liquidation. And I'm going to show you guys this tool real quick. So this tool is awesome. I use the scalpindex.com app all the time. It shows you hidden iceberg orders, which is great. They have a dark mode so it doesn't destroy your eyes. And it tells you about the BitMEX liquidations. So if you go here and you look on that huge wick, how many liquidations did we have? Well, we had $107 million. Well, not $1 million, but 100 million positions liquidated, right? So this was a lot of liquidations here. This was people longing the top. We flipped over very high leveraged liquidations and stuff, and those went out right on this candle. Boom, 104 million liquidated. And actually, I think that might be in dollars. I'm not sure. I have to confirm that. I'm not sure. If one of you guys know, let me know in the comments down below, by the way. Anyway, right now, 1 hour chart, point of control. We're right at the point of control now, right? There's a lot of volume in here. Bulls and bears are fighting neck and neck. And just recently, if you look at the cloud went flat. And now the cloud has finally flipped over and the cloud is growing bearish, right? We've got a bearish red cloud overhead. I think short term, we might come up here and actually finally retest our 50 EMA. We haven't really tested any of these technically on the small 1 hour time frames yet. So I think we'll probably come up, maybe test 8,700 again, maybe 8,750, somewhere around there. And then we're probably going to end up rejecting there. And since we already were using the 200 MA as previous support, 8,300 would be, again, on the 4 hour chart here. Why do big whales have their orders at 8,300? Why are there a whole bunch of buys down at 8,300, right? Well, 8,300 on the 4 hour chart is our 100 MA. On the daily chart, well, it lines up with the top of this support here, right? That's support. That's why whales have orders there. Another good tool to use is a heat map tool. I'll go over that probably on Friday. I'll go ahead and get into that. I know that this video is getting a little longer now, so I apologize for that. If you like the video, go ahead, give us a thumbs up, and let us know what you like down in the comments below. If you didn't like it, go ahead, give me a thumbs down. Let me know what I can improve down in the description below. I really appreciate you guys taking the time to enjoy this analysis with me, and I will go ahead and see you on Friday. Happy trading.